Good evening, ladies and gentlemen. Welcome to the latest episode of the Inside Crypto podcast. Today, we are bringing you the latest news from the world of cryptocurrency, everything that has happened in the last week. Thank you very much for joining us. Today, there is so much going on. It has been a crazy 72 hours in crypto. But let's first dive into the story today. Today we have 8 stories from you taken from across the crypto space. Some good, some bad, some pretty terrible. Let's get started. So the first story we have with you today is from CNBC by Ryan Brown. It says more than $200 billion erased from entire crypto market in a day as sell-off intensifies. The price of Bitcoin plunged below $26,000 on Thursday, hitting its lowest level in 16 months. Ether, the second biggest digital cryptocurrency, tanked below $2,000 a coin. The collapse of stablecoin Terra USD has led to fears of a broader market contagion. So a contagion is like a virus. This story explains what is going on. Investors are fleeing from cryptocurrencies at a time when the stock markets have plunged from highs of the coronavirus pandemic on fears over soaring prices and a deteriorating economic outlook. US inflation data out on Wednesday shows prices for goods and services jumping 8.3% in April, higher than expected by analysts and close to the highest level in 40 years. Also weighing on traders' minds is the downfall of embattled stablecoin protocol Terra USD or UST is supposed to mirror the value of the dollar, but it plummeted to less than 30 cents Wednesday, shaking investors' confidence in the decentralized finance space. So there's a lot going on here that we can talk about. We have another story covering Terra. We have talked about inflation as well. Inflation not just in the US, but in pretty much every country across the globe. There are lots of things that are affecting the market, right? The market's down pretty much everywhere, wherever you look. So hold on to your horses. We don't know what's going to happen. All right, let's move on to the second story of today. Our second story is by Julia Horowitz, CNN Business, updated at 12:30 GM. It says that investors in stocks, bonds, and commodities are all on edge right now, but in the market for cryptocurrencies, unease has morphed into full-on panic, catching the attention of regulators in Washington tasked with maintaining financial stability. What's happening as of last Friday, the price of Bitcoin has plunged. We've already talked about that. Terra USD as well. If we see this continue for multiple days, then we'll start to get pretty concerned, pretty worried. Marcus Sotiro, a crypto analyst at digital asset broker Global Block, told me the implications are so large it's just unknown. All right, this talks more about stablecoins. The Federal Reserve estimates that the value of stablecoins grew rapidly over the past year, topping $180 billion in March. The boom helped spur the rise of algorithmic stablecoins like Terra USD. These coins are technically worth $1 too, but they aren't backed by hard assets and instead use financial engineering to maintain their peg. At first glance, the latest report on US inflation appears to contain some good news. Consumer prices in the year to April rose 8.3%, down slightly from March, when inflation rose at the fastest clip in 4 years. So the biggest part about this story is that the Fed will start to pay attention, and when the crypto markets crashed and how fast they crashed, this was incredible, right? And most people in the crypto space are expecting that regulators from all over the world, right? Janet Yellen, the Fed chair, I believe she is, right, basically said if market panic continues to go on, right, they're going to step in and do something to protect the average consumer. If you've been following Terra, if you looked on Reddit, if you looked on Twitter as well, you've seen the stories of people where their friends convinced them to say, hey, you should invest in Anchor Protocol because you get 19.63% and it's fairly stable. And loads of people have put their savings in, or their life savings, right? And I just recently saw a story on Twitter as well. A guy posted like he bought like 50 Terra at a time when it was like $100 for one Luna, and his money is right pretty much valued at $10. Binance just suspended trading for Luna and UST, which tells you how serious the situation is, because Binance technically in some ways are better than most exchanges because they try to remain neutral, but they've basically gone and said nope. Nobody can trade this anymore because people don't understand what is happening behind the scene about the network stopping producing blocks, and when they do stop producing blocks again, and the price will just crash even further. Let's move on to the third story for today. Our third story today is from Coinbase experiencing major outage as crypto prices plummet. From Russell Brandon, May 12th, from The Verge. Your funds are safe and we are actively working on the issue, the company said. Now, this is a story that has happened numerous times, right? Whenever a sort of high stress moment in crypto happens, exchanges go down. Binance users, I have not experienced this, though my wife informed me earlier today. She was like, yeah, this has happened with Binance. I haven't experienced it. But I know this is a common complaint on Reddit about Robinhood, about Coinbase as well, where people say, yeah, I'm trying to do a trade, right? The markets are crashing. I want to sell and get out of crypto. But they can't do that because Binance, or I should say Coinbase, this is something to take into account. If you are a Coinbase user, if you do see blood in the streets, as they say, and you're trying to get rid of your crypto, or you're trying to buy in at the dip, using Coinbase is pretty risky. You might want to try the decentralized route of keeping money in your MetaMask and going to Uniswap or going to Polygon or going to another network and then trading that way, because as easy as centralized exchanges are, they are the ones that usually get swamped the most. And Coinbase is the largest exchange in the United States, I believe. Okay, let's read this story as well. Coinbase users are reporting difficulty withdrawing funds, heightening fears amid a widespread crash in cryptocurrency prices. The company confirmed the issues in a tweet on Thursday. We are aware that some customers are having issues trading and accessing accounts on Coinbase and Coinbase Pro, the company said. Your funds are safe and we are actively working on the issue. We'll provide an update soon. In communities on Reddit, users have reported rolling delays in withdrawals, leaving thousands of dollars hanging in the balance. More recently, another user reported that they were unable to access the app or the website at all. Has the bear market crashed their service, the post reads? Pretty frightening if someone wants to make a fast trade. Very good point, right? All right, now, as usual, all the links for the stories today will be in the show notes, will be in the YouTube on the bottom, so please have a look. This is definitely a disturbing trend, right? That a lot of cryptocurrency companies have not sorted out the server issues, so that if you are trying to buy, or you're trying to sell, or you're trying to do something with your money, and it is like a very urgent situation, like it has been the last 72 hours, they're pretty unreliable, as the past has shown. So that's definitely something to take into account. Okay, let's move on to the fourth story for today. We are in what some people call the crypto winter or the bear market, right? What does that mean? So bull markets, right? Bull markets are when things are going up. The idea of the Spanish bull and charging and prices going up in one direction. But for a lot of people who have just gotten into crypto in 2021 or in 2022, they've never experienced a bear market, which is why I chose this story today. So this story explains, it says, the big picture, the crypto market is still very new. There are risks and shaky technologies, many of which are failing in spectacular attention-grabbing fashion this week. But at the same time, the industry is on firmer footing today than it was in 2018's crypto winter, the last bear market. A bear market is traditionally thought of as a time when an asset trades below its prior high by 20% or more, usually accompanied by a lot of pessimism about the near-term future. But this is a nonsensical way to think about crypto. A 20% drop could just be a weird Tuesday. Nevertheless, we may arrive at a bear. The mood needs to shift and we might be there. But in crypto, it is not truly a bear market until there are real consequences such as funds close, startups shutter, or established crypto companies start announcing layoffs. Be smart. This is where things are different this time. Billions of dollars are committed to building out the industry, right? Loads of institutional investment. We have talked about this on the podcast before. Just this year, venture funds with over $1 billion under management have announced, including Horn Ventures, Electric Capital, and Andreessen Horowitz's new fund, FTX Ventures, and others, right? Brady's thought bubble. Crypto will not be dead after a severe downturn, but it might drop out of the national conversation again. Regardless, the sector will carry on. One of the days, something will get folks excited again and the market will perk back up. Okay, the bottom line, bear markets are familiar. No one likes them, but they come often enough that the established leaders know how to ride them out. So, right, writing them out takes place in a number of different ways. It could be somebody where you've put in a small percentage of your money, right? So you can keep your money in your crypto because you invested in 5, 6, 7 different projects. And you're just going to wait it out. You're going to wait until the market peaks back up again. There are other people, right, in the different situation where you've invested a lot of money, maybe money you shouldn't have invested, and you need to get that money out. So for those people, you want to try and get it out, and that's another strategy. Typically, strategies when it comes to bear markets is people cash out into a USDT or other stable coin. Definitely not UST, right, Terra UST, and then they wait for a time that they want to buy back in and they get in that way. So there are loads of strategies for you to consider. You can decide what works best for you and do your own research as always. All right, let's talk about the fifth story today. This is, of course, about the UST story, the Terra Luna story, the Do Kwon story, right? The UST Crash is destabilizing crypto. So crypto started going down, I believe, almost a week ago. Prices started going down, and that was believed because of the Fed increased the interest rates, about the Ukraine war, about the supply crunch, because of COVID lockdowns in Asia and in China. And then stuff started happening with UST, and that further brought the market down. Let's have a look at the story at the moment. So the story is this. It says, the collapse was stunning, a bank run that happened with lines of code, not sidewalks crowded outside a branch. From 30 billion just last week, the Luna cryptocurrency's market value plunged to 79 million this week. Its sister stablecoin UST, which is supposed to be pegged 1-to-1 to the US dollar, plunged below 37 cents Thursday. The crash was the kind of risk in the fast-growing crypto market that regulators have been warning about. It also brought renewed attention to the role of stablecoins in an increasingly unpredictable space. Stablecoins are supposed to offer a safe way for crypto users and investors to trade in and out of volatile cryptocurrencies. But the UST and Luna collapse strengthens the view that the design of some of these stablecoins pose serious risks. Algorithmic stablecoins like UST, backed by automated software meant to maintain a dollar peg rather than reserves, are particularly troubling to some observers. I see these instruments as incredibly opaque rather than transparent, Bill Nelson, chief economist of the Bank Policy Institute, told Protocol. They end up being held with a lot of leverage, and that's where the danger comes. All stablecoins are not created equal, said Steve Ehrlich, CEO of Voyager Digital. There is a significant difference between what Terra was trying to achieve and an algorithmic stablecoin based on crypto-backed collateral than with fiat-backed stablecoin like USDC, for example, backed by US dollars and the US treasuries, he told Protocol. Right. For those of you new to crypto, right? Crypto, you have collateralized crypto stablecoins like USDC. You have algorithmic stablecoins like we've had UXD protocol on the show. They have their stablecoin. So algorithmic stablecoins that are not backed by anything are a serious issue. That's something that people should be worried about. Let's go on to story 6 for today. All right, our 6th story today is Crypto Could Be Contagious by Bloomberg by Matt Levine, May 13th, 2022. It says, a programming note, money stuff will be off tomorrow, back on Monday. In 2008, the prices of some structured credit products built out of subprime US mortgages went down. And as a result, there was a global recession and millions of people lost their jobs. If you had asked a normal person in 2007, how would it affect your life? It turned out that investors have mispriced the super senior risk and synthetic collateralized debt obligations built out of subprime mortgage tranches. Okay. So this is just talking about the subprime crisis that happened. All right, and then we go into cryptocurrency. 5 years ago, if every cryptocurrency went to zero, a lot of people would have lost a lot of money, but they would mostly be crypto people. Some individuals and some hedge funds that bought crypto would lose their money. The contagion to the real financial system would have been small. Lamborghini dealerships would have had a rough year, but most people would barely notice. 5 years from now, if every cryptocurrency goes to zero, I don't know what the next 5 years will be like, but a plausible story as of last week anyway, is that there will be continuing integration of crypto into the real economy. More crypto companies will be big and important and intertwined with other companies. Their stock will be indexes and they will borrow money from banks and use their own money to finance real businesses. More traditional investors will own crypto and they will make levered bets on crypto. And if those bets blow up, they will naturally sell more liquid traditional assets, causing contagion from crypto markets to stock and bond markets, right? Crypto platforms will be used for real economic activity. Ordinary people invest their savings in these platforms, and these investments will be used to finance real non-crypto business activity. You'll get your mortgage from a decentralized finance platform or whatever. This is all a very bullish story for crypto. In this story, broad institutional adoption and growing utility will be good for popularity and prices of crypto. Right now, we are probably in between. Crypto has been having a horrible time. A massive sell-off, we've talked about this, and there does seem to be more worry about contagion to broader markets, at least through the transmission vector of retail meme traders. What this story is talking about is the idea that as crypto is going down, people who have invested in crypto will start to sell off other things that are non-crypto related to make up for their losses in crypto. And this has happened, right? Is we have seen people who are saying, okay, I've lost X amount of money in crypto, I need to get this money back somehow, so I have to sell my stock or sell this or do something else. And this all sort of has a knock-on effect on the larger financial system as a whole. This is something very interesting, something to watch moving forward. Okay, let's move on to our 7th story for today. Our 7th story for today is more related to sports. It's about from front office sports is how the crypto crash could impact sports sponsorships. So this is a story many of you will be familiar with if you're living in the States, if you live in Europe. that cryptocurrencies like crypto.com, right, like FTX, they have been sponsoring sports teams. They've been crypto.com bought their own arena. And with the market crash, the amount of money that they have is significantly diminished. This article talks about what happens if that money is diminished. What are these sports teams going to do? What are the arenas going to do? Are these companies going to have enough money to pay what they owe, right? Because while crypto.com pays 700 million, right, they didn't just take 700 million off their cash and they say, yep, we're buying this, right? They're probably paying this off month by month, something along those lines. So let's have a look at the story. It says, as more than 200 billion of the cryptocurrency market was sold off. Okay, this talks about the loss again. Crypto.com signed a 20-year deal reportedly worth 700 million to take over the naming rights of the Los Angeles Staples Center in November. There could, however, be a slowdown on future deals if the valuations of major exchanges slide. Dallas Mavericks owner Mark Cuban, however, doesn't seem to be too concerned about the future of crypto, comparing the upheaval to the tech bubble crash 2 decades ago. Crypto is going through the lull that the internet went through, Mark Cuban tweeted on Monday. FTX and Coinbase each had ads run during the Super Bowl, during which NBC charged 6.5 million for 30 seconds. So it just basically means less money for advertising, less money for things that involve sports. It's just a short-term thing as the market recovers, so nothing to be too concerned about, but an interesting story nonetheless. And as usual, with every news segment, with every news story, we always have to end off with a positive story, right? So it is 8:35 p.m. in Taiwan time at the moment, and the markets have somewhat recovered, right? Bitcoin is above 30K, Ethereum is above $2,000. So from Blockworks, it says, native crypto exchange tokens hint at first sign of broader market recovery. Crypto exchange tokens are faring much better than blue chip cryptocurrencies, including Bitcoin and Ether, in lingering aftermath of Terra's implosion, right? And this talks about the markets going down as well. It says, in fact, some of the resilient cryptocurrencies of late have been the native tokens that power trades and exchanges, particularly UST, Leo, or Bitfinex, akin to Binance's BNB coin. Bitfinex traders can save on fees by holding the token Leo, doubles as a mechanism to reimburse users for funds lost in a sizable 2016 hack. And over the past year, the native cryptocurrency Bitfinex competitor FTX FTT dropped less than 4%, while Ether and Cardano plummeted 13%, right? So the idea behind this story is that a lot of native protocol tokens, FTT, BNB, have been doing pretty well. And overall, right, the market has recovered. There are still certain cryptocurrencies that have not recovered as much. Solana and Avalanche are still fairly down. So you can take that with whatever you want. Who knows what's going to happen? I saw a poll today with about 40,000 people, and they were like, what is the next price in Bitcoin going to be? Again, not financial advice. And was it going to be 40,000? Was it going to be 20,000? The majority of people, like 75% of people, said the next price Bitcoin is going to hit is 20,000. So this would give me pause to believe that overall consumer sentiment is still negative. So that means if prices start to go down again, that people would start to panic sell, and then things would go crazy. But this is the news for today. I hope everyone enjoyed today's news segment and the sort of overall look of this episode. I know we usually go through the stories on this sort of stuff. You get to see the text and follow through with me. I want to try something different today. And if you like it, please let me know. Come to our Telegram or Discord. Message me at Amun Korean or message at Amun AMUN. And I'd love to hear what you guys think about what we have done with this segment, with the moving background, with the intro sequences. We could be doing something even more complex than this if you guys do like it. I enjoyed making this today. But anyway, guys, we will talk to you later.